we're entering bizarro world. We're entering the upside down because I'm going to defend Intel and you're critiquing them.
Hello, listeners. Welcome to another episode of The Circuit. I am Ben Bajarin.
Greetings, programs. I'm Jay Goldberg.
All right. Well, this week, I guess the most requested topic from everybody, which I don't think will be a huge shocker, is Intel, because they had earnings. The last 3-4 months have been interesting for Intel for a couple reasons. The stock has clearly gone up, showing that people believe there is a favorable cycle hitting Intel. You hear this analogy. I hear a lot, the sum of the parts analogy of Intel, which I get, and I think actually you should do a sum of the parts analysis of any company. But I get those dynamics. That said, it was a good but also somber earnings because there's money on the table being left, which we can talk about, is a little unfortunate in Intel's timing. But let's just start with the top level takes. I'll let you jump.
So Intel reported Q4 numbers. Their quarter for Q4 was very good, above expectations. And then their guidance was not good. They guided revenue way below consensus. They guided EPS way below consensus. And they blamed supply constraints.
Yeah.
And then we spent 30 minutes on the call with everybody asking, what's constrained? And I don't think anybody was particularly satisfied with the answer.
Yep. So my take is, I think there's two parts of this that are hard, right? It's what do you want to call it? A black box of analysis to try to estimate Intel's wafer capacity. They've never said what their wafer capacity is, and TSMC is a little bit more transparent. It's a little bit easier to understand what their wafers per month capacity is, which gives you a little bit of a helpful read to kind of tie to growth. With Intel, you don't know. And we have said this on this podcast for, maybe 6 months, if not longer, that CPU, like general purpose server CPUs, would see some strength at some point as soon as the hyperscalers and others decided that it was time to upgrade a good section of their legacy infrastructure, and that time is now happening. And the challenge for Intel is, like, I don't know how anybody planned for this, to be honest with you, because I also feel like AMD's narrative was also like a little caught off guard. But essentially, everybody's starting to upgrade these CPUs, like we're saying, in the cycle. And unfortunately, Intel is like at the very beginning of scaling the foundry. Like, they just don't have the wafers. So the demand is there. They could have made a lot more money. Again, like we've said this all the time, right? Everybody in this industry could have made a lot more money if they just had more capacity. Like, fine. But this is one of those this is a particular choke point because they just aren't able to scale 18A as fast as they need on their timelines. And so now you get this unfortunate dynamic of, well, we need to shift wafers from client to server, which, again, AMD's had to do this before. This is not horrible, but it's a little unfortunate that they weren't where they might be in a year from now in the same cycle where they would have had a lot more capacity. And I guess my assumption is people, you tell me if I'm wrong, like the read, did people just think they had more wafer capacity than they did in kind of their growth projections? I guess that's perhaps one of the bigger disconnects.
I think a couple things were going on. One is the stock had run pretty significantly last few months, and for all kinds of reasons, none of them quantifiable. The other thing I noticed as I was looking at prepping for early this week as I was writing some stuff about it, I noticed that consensus hadn't moved. Like consensus hasn't changed almost since the last earnings call, which I found curious, right? That's really rare that you sort of like consensus had barely moved since the last earnings call, since before the last earnings call. So people
Right.
didn't really change the numbers after. So I think partly it's a function of people just didn't know what to expect, and so just left their numbers. This is as good as a guess as any kind of mentality. I also think it's been a long time since anyone has really looked at the fundamentals of Intel as a business, because up until 6 months ago, there was a real debate, and we've had it, about whether or not Intel would survive. Right? There were existential questions facing Intel, and in that context, no, people stopped looking at the actual numbers. And so there hasn't been the same amount of work done on Intel's capacity, and so people didn't know what to expect. There'd been so much excitement building up to it, coming out of CES and everything, that people didn't know what the number was, but they knew it was going to be good. And then it was not just not good; it was just bad, and that's where we end up. I think that's a lot of it.
Yeah, I mean, I don't disagree with that. I mean, I think at least a lot of the commentary I've heard, right, people have been on top of just what's going on in foundry, knowing that was going to suppress gross margins. That's been the conversation as a whole. It's a high fixed cost business. We have this conversation all of the time. I think my concern, though, to be honest with you, okay, this let me just lay it on it this way. There is an undoubted opportunity coming forward, right? You've got structural dynamics. One, TSMC just does not have as much capacity to meet demand. So then the question is, all right, so they would love a second source to meet demand. Great. So that's either Intel or TSMC. I'm sorry, or Samsung. And I have a lot of strong thoughts about Samsung not being competitive here, but that's for a whole nother conversation. I think where I struggle is they seem very tempered in CapEx spend. I get for the need of a healthy balance sheet. This is great. This new administration, meaning Lip-Bu and others, like, yes, we want to be healthy. However, at what point, like, do you think you have a lot of more capacity or a lot more opportunity ahead of you that it's worth investing now so that this doesn't remain strong? Because he basically said we're going to remain supply constrained. So the ability to manufacture wafers constrained throughout 2026. Okay. But CapEx is flat to down. And I know some of that would relate to next node, so 14A. But there is this undoubted opportunity, and who's going to get this, right, is now the question of the moment, because there's dollars there, dollars for the taking. And I do think every dynamic we're going to talk about favors AMD as well. But that's kind of my concern. Like, are we maybe a little too cautious in a moment where there's a lot of opportunity? Maybe there's a balance. I don't know.
Okay, everybody, you're sitting down. We're entering Bizarro World. We're entering the upside down. Because I'm going to defend Intel, and you're critiquing them.
Okay, go ahead.
So
here we go.
World's turned upside down, people. I don't know what's going on here. I actually came away from the call encouraged by a lot of things, right? And if you are, and so if we let's just take everything Lip-Bu says at face value, right? He seems like a pretty straight shooter. He's not particularly into spinning things crazy. He has said he doesn't want to add capacity until he has firm customer orders. Now, the timing for that doesn't work out particularly well, right? Because the lead times on an order for chips is much shorter than the lead times on standing up a fab.
Yep.
But let's just say he's figured out, he's defining these things in a way that that the timelines work.
Okay.
That actually makes a fair amount of sense, right? For a company that is still fairly tight on cash, has a lot of debt and not a lot of cash on the books. Let's be moderate in how we spend. And I think he is in large part not talking to us and the investor community. He's talking to his own employees.
Sure.
That's the big vulnerability they have has been getting the company into the right mindset that they can't spend like they used to. They have to be like
More efficient.
more
Yes.
efficient and more determined, right?
Yes.
And there is no way that Intel is going to be truly competitive with TSMC at 18A, right? It cannot be truly competitive with TSMC until after 2030, after 14A, right? And on that time frame, what they're doing now seems perfectly reasonable. Now, the big problem we have that this leads to is what happened on the call, which is no one's quite clear like what are they exactly short of. Like Stacy Raskin from Bernstein was asking like his typical very tough questions in his typical manner. Like, you guys are a factory. Why don't you have a factory? Why can't you make more chips? And he knows that it's not as simple as that. He's just making the point of like what's going on here. It seems more complicated than that. And I think some of it is just like there's a lot of things in shortage right now. I just wrote a piece about it last week. We've talked about it a ton. Like, it's not just their capacity that's short. It's also all kinds of inputs, right? There's shortages in substrates, right? When was the last time anybody talked about substrates? Like, nobody pays attention to substrates. They're just out there. They're in shortage now, right? There's obviously memories in big shortage, right? And so there's a lot of pieces to this, and Intel's not just talking about its own capacity, but it's also like all of its sort of ecosystem. The whole industry has to be there, and there are shortages. And we knew this going in, and it's all right. So they can't produce as much as they want. It's not entirely down to their own fab capacity, and capex right now won't solve that problem, right? Because any capex you put on now is it's 6, 9, 12 months before that really yields a result. So I think they're just going through the same memory shortage everyone else is dealing with, and it's going to weigh on them. And they seem pretty confident that they can actually improve throughout the year and start to hit their numbers, as we go through the rest of the year.
Is there a chance? So, all right, so let's just talk about commentary here, because I do feel like one difference with Lip-Bu is he approaches this a lot more humbly, I would say. I don't think he wants to be like grandstanding and pumpy. I think there's also a little bit more kind of candidness. So take that as you will. And to be honest with you, I always thought the investor community valued transparency and candidness. And so I think he's accomplishing that. Is there a degree in which he's what's the word I'm looking for? Intentionally being conservative, not pumpy, but he knows a whole lot more about like what this business can achieve financially than, I'm not saying they're sandbagging, but you know what I mean? Like, I feel like, is there a chance that they really have a whole lot more confidence in all of this than they're letting on?
I actually think he is fairly I don't want to say transparent, but I think he does not. I mean, as far as I can tell, he's not known. He's known for being fairly direct and fairly honest. Complicated man, but also like I don't think he's outright lying to us. And I think again, I'm going to take what he says at face value. I would say one of the other positive signs I took away from the call was the degree to which he is so much more positive about their business than he was 6 months ago. Remember 6 months ago when he said maybe we won't do 18, maybe we won't do 14A. Like that was shocking, right? And now that's been removed. It's not a question of whether or not they're going to do 14A. It's much more a question of when is it going to be and when can they actually start spending against that.
Yep.
And so should he be a little bit more upbeat and more promotional? Yeah, but that's not in his nature, right? If you want that, there are other companies in the sector
Sure.
you can
Sure.
go talk to.
I personally, again, I don't have a problem with it. I just feel like, doing what I can to just navigate and interpret signals in the market and in the supply chain. Like, it feels like there's a lot of very positive signs for them, but they're not sort of like, I don't know, pounding the table on X, Y, and Z, and even in a a supply constrained environment where they're going to be sold out. And to be honest with you, one of the things I'll be very interesting in, and for everybody out there who watches these market share metrics that come largely from Mercury Research, but a few others, right? You look at these statistics of CPU share of Intel and AMD, and then revenue share, and you see where CPU share as a whole stays largely in the 70s. For Intel, it's declined a little bit, but it's stalling there. But revenue share is the one that AMD has continually climbed and gained on Intel, and that's because they've been able to maintain premium ASPs for their server CPUs, where across Intel's roadmap, they've been a little bit more aggressive on pricing to get some of that volume. And now I think they're in a position where they can actually bring back some pricing strength to their server CPU ASPs. And I will be very curious what that does to their revenue share trend line, given that it was declining as AMD's was growing on a quarterly basis. But I think they're in a position to do that based on demand.
I mean, Intel has been cutting pricing because their process sucked. Products weren't great, and so they had to cut pricing to match TCO. Right? Performance
well, but they
is less,
did this
so
even with TSMC when chips were good. Like it was just that was what the competitive. That's the competitive bet they thought they had to make, right?
Yeah, but that was a long time ago. Just in the last few years, they've lost share to AMD, and they're very vulnerable, and so they've done what they lowered prices to hold on to the customers.
Right.
And let's not forget, 18A is just now like hitting volume, right?
Yeah. I mean, volume,
right?
Volume-ish.
Volume. It's and I mean, I think that the probably the most significant knock is that they're just not yielding where they need to be.
That's right. That's exactly right.
That's the real problem. They're not yielding where they need to be, where historically they would have been. But I'm pretty like, all right, this is the leap of faith I'm taking, is that they can actually
execute
and get yields back. This is a company that once was very good at that, and I'm going to take the leap of faith that they can do that again. It's not as fast as anyone would like, but they're not yielding where they need to, and all their other problems fall from that. And again, we're early into 18A. They have they'll get it right. They have volume now, and they can learn.
Yeah. So on this, I'm going to make a point that I think should stabilize, or at least be a fundamental insight that I hope other people use. And if you just heard that buzzing, a fly is buzzing around Jay's
giant bumblebee.
Office. Oh, a bumblebee is in your things. Well, if you hear it, folks, that's our guest, Bumblebee, the Wafer. So I was in a conversation this week with some folks at Applied Materials, and we were talking about advanced packaging. And I guess I didn't fully appreciate. I know how complicated advanced packaging is, and I was always operating under the assumption that in a chiplet based world, so disaggregated design, right? Chiplet based world, tiles being stitched together, that wafer yields were important, but not as big of a deal, because essentially you were getting you were using a tile on the wafer instead of like the monolithic, right? So it's part. However, apparently there's a whole set of challenges in yields when you do advanced packaging, which is what these are. And so to me, there's also a part of this is where, as good as Intel's advanced packaging menu, right, they have moved entirely to very, very complicated systems of chips on design. And I didn't think this prior, but I now think that's actually impacting yields as well. So it's not just wafer yields. I think it's actually the entire process of advanced packaging as well, which just needs to, again, both those things are just a factor of helping over time.
Yeah, I don't know. I mean, I certainly agree that packaging chiplets is very yield calculations around chiplets is very complicated, because you're compounding error rates across multiple wafers, and so it gets kind of the math can work against you, the statistic can work against you, and it also greatly increases the difficulty of test when you're doing chiplets, because you got to do each tile has to be tested, and then you have to test the whole package. But I have not heard the same sort of problems that I've not heard that they have problems with yielding on packaging. It is new, so I'm sure they have. It's not great, but it's. I think the problem is just more around their EUV 18A line, right? And that's plenty of problem there. And yeah, and
Yeah.
advanced packaging is hard, and that's why there are only two companies in the world that can do it, and the other one is at max capacity. Right? This is another place where I think the call actually sounded really positive when they talked about packaging. They're getting really large orders for packaging, right? They
Yeah.
like the CFO said he had originally thought that it was that packaging deals would be measured in millions of dollars, and now they're seeing their first $1 billion plus orders.
Yep.
So that's huge. That's a big deal. I certainly was in the same camp too. I didn't think packaging would be material, but it's not material, but it would be meaningful. But it will.
Yeah. No, agreed. And that's why, like I said, there was a lot of underlying positive momentums, right? There's commitments across the board for them, right? Saying that people are pre-buying substrate. It's like,
Right.
okay, who's pre-buying substrate? Like, were we talking about your hyperscaler customers? Because you sell those as packages, like, or are these potentially upcoming customers for a foundry, right? For deal. So it's like, but I think again, right, coming back to the structural fundamental points is they need to execute, like you said. I think this will be the very thin needle that has to be threaded to meet this timeline to execute on this function, because wafers are extremely valuable. Wafer capacity across the industry is extremely valuable. And Intel Product Group, right, is struggling to meet that, which parlays into a point that I want to make, because I published something yesterday on the new newsletter we were talking about that we launched called the Diligence Stack on Intel's foundry opportunity. And one of my theses there is that for third-party customers, what becomes attractive is CPUs from the ARM-based CPUs from the hyperscalers and some percentage of their custom ASIC programs. Doesn't have to be 100%. The problem with this now is they got to have wafers for third parties. So now I'm like, man, like, okay, here's my concern. If I'm a customer right now for 14A, looking at 14A, how do I know you have wafers for me? Because you guys can't meet your demand. Demand is not going to go away for your server anytime soon. And I know that 14A revenue would be a 2029 story, but still, these are decisions that are going to be made this year by those customers. And I would just be worried. Like, you would need to convince me you're going to have wafers for me, right, to commit. And now I feel this is an interesting tension where, again, execution and threading this needle on timing is going to have to be perfect, honestly.
Okay, fair enough. But like we have been banging this drum probably since the first episode of the show, which is that Intel Foundry needs to learn how to serve customers. And I would say all those things you just sort of described are what it means to serve a customer as a foundry. Like being able to forecast capacity, being able to be reliable, being able to support customer tests and all that, and work through the customer workflow. And that's what they're struggling with. And you remember, you think back to when they tried to acquire Tower Semi, the justification there was that they needed the Tower Semi people in order to learn from Tower Semi how to be a customer-facing foundry. They didn't get Tower, but they do have their packaging business, and I would say that the packaging business is going to now looks like it's going to be where they learn how to service external customers.
Yeah, agreed. All right, well, let's go back to this magic of CPU demand for a couple things. So
before we go to that, I want to close on Intel with my new theory of the Intel universe, because
theory of the Intel universe. Okay,
right? Because you sort of, when we started talking about it, you were sort of describing it as like you compared it a lot to AMD, and so I was in my head I was kind of joking like, Intel is the new AMD, which is not a good thing. Intel is the new old AMD, but I noticed something on the call, and once you see it, it's hard to unsee. But there are a growing number of parallels between Intel and the movie Ron Burgundy Anchorman.
Okay. All
right?
right.
And this got pointed out to me when I was talking to somebody about Panther Lake, and somebody asked, "Are the real panthers in the Panther Lake?" Right?
Mm,
And then
yes.
and then every time Lippu talks about customer delight, I keep thinking about like they're singing Afternoon Delight. And in that sequence, there's a part in the movie where they say, "Oh, this works 60% of the time. It works every time."
100% of the time. Yeah.
And I'm like,
Every
"That's
time.
that's their yield guidance. That's Intel's yield guidance."
You have to be a lover of Ron Burgundy to catch the
I
references.
I, I think our audience will. Some
Real
of
Panthers.
it's real Panther in here.
Um, okay. So, all right. So let's talk about the CPU demand. So this is definitely like happening, right? The degree that this is growing in unit volume and revenue volume per year is still a debate. Obviously, capped perhaps by by capacity constraints. But I I'm interested here, and I'm going to make a point about ARM because we did some math on, and I shared this in one of my reports on NVIDIA. We did some math on the number of ARM CPUs in NVIDIA's 8 cluster scale of Vera Rubin, and it is 340. And when you just look at sort of what's coming, sorry, 440, not 340, 440 ARM CPUs in a 8 pod cluster for Vera Rubin. Um, everybody that we sort of talked to in the space here thinks that even as we move to more inference based workloads, that number will go up even more. Like that the number of CPUs is continuing to increase, not decrease so much as a ratio to GPUs, because they're playing so many things. And like we talked about, like DPUs playing a higher level orchestration level than the CPU head node, and there's variants of that will continue. So it doesn't have to be a 256 core CPU. It might be in this case an 88 core or something, right? The capabilities are increasing, right? It could be smaller than that as a different orchestration layer, but the bottom line is CPUs are going up. But if you just back out the number that I just said and look at how many rack shipments, which again, this is an estimate, but is estimated for NVIDIA this year, that would put NVIDIA at roughly 17% of the server CPU market in unit volume. Again, they don't monetize that, so we're not going to put revenue share to it, but just number of CPUs shipped, 17%. Like, that's crazy. I remember, I know ARM has been doing well, right? And based on number of new shipments versus old or AI, where ARM has a good share. But I remember when they weren't even at 1%, and it took like a decade to get 1%. And now in this case, right, NVIDIA is almost single-handedly going to jump their share, near 20%, right? And if you factor in some others, it could be higher than 20% as a total, by the end of this year, which is just signs of all sorts of times. And I don't want to necessarily argue x86 versus ARM too much, but I think it's interesting, right? The growth factor that we're in for this, and then again, what's happening in ARM CPUs, and the hyperscalers are going to do more ARM CPUs.
You remember a time when ARM share was tiny. I lived it.
No, that's true. That's
You
true.
you
You were in
adopted.
it.
You adopted. I was
You
born in it.
you were in it when it was. We're at almost 1%. We think we'll get to a couple percent. Okay, I remember those ARM analyst days.
Yeah. I'll tell you, I was having very weird emotions on the Intel call yesterday, and this is going to get a little technical because they were addressing this problem where they don't have symmetrical multi-threading in their server CPUs, and that was so crushing to me because when I was selling in the business of selling ARM CPUs, ARM didn't have symmetrical multi-threading in whatever version of Neoverse that was back then, right? And that was a huge critical problem that cost real customers because they didn't have SMT then in ARM. And now here we are, not even 10 years, not even 10 years later, and Intel's the one that doesn't have SMT in their CPUs. It's like it's the world's turned upside down.
Yeah,
It's the
yeah.
theme, right? And
For now,
so
I imagine some of that will come back, but to a degree, I think it's interesting where you just look at some of the CPU roadmaps across the board, and it really is kind of a like we don't need to keep packing performance, raw performance year over year. Like we need them to maintain their performance but get more efficient. Like that's kind of the role. Like the role of CPU is evolving again, despite this point of yes, it's growing, its role, and I think the architectures will slide into a sweet spot about what it needs to be to keep up with agentic AI on AI accelerators.
yeah, yeah. I mean, it is a very interesting time in CPU land, um, both in the data center and to talk about in a second, the client. But on the data center side, it is clear that CPUs still matter. Um, I think that they're going to have to change a lot. We're going to see some new architectures around them uh, because the task is very different. But as we get into the world of more application focused AI and heavier inference, CPUs are going to matter a lot. And it's an interesting fight. And I think part of the challenge and part of the opportunity Intel has is they still have, it looks like they have really good CPUs again, um, sort of, mostly. Uh, and can they get capacity to sort of claw their way back? I don't even think the problem is capacity. I think the problem is, can they build customer credibility on the product side to get people really interested in design, not just like, oh yeah, we need some CPUs for this, but like actually designing Intel CPUs into their server. And right, and Lip-Bu talked about that on the call yesterday, where he mentioned a lot of times where they're engaged in system level discussions.
Yeah,
And that's a big deal. And especially it's another one of these things that's going to be very hard for the organization to handle, because not so long ago they were the ones who were sort of calling the shots in the systems, and now they're just competing for a socket in it. And that's why Lip-Bu is important, because he doesn't care about what it used to be. He doesn't care about the glory days. He wants it.
yeah,
He's just like, here's the opportunity. Let's go get it.
yeah, yeah. I mean, and I do think I mean, obviously, this is largely hyperscalers, coming to them buying general purpose data center CPUs. Um, but I agree. I think the degree that, because all of them again are making their own ARM CPUs, right? It's not like that's going away. So there is that tension between where do I put my x86 workload CPUs, where do I put my own custom ARM? Um, but regardless, like you're seeing, I guess what I would say, strategic and tactful design architecture, design choices across all of those vectors, which I think is interesting. And like you said, the as we shift to client, the client side of this is interesting because as of now, if you listen to or look at most of the reports, everybody's sort of predicting that client is a terrible 2026, because obviously you have memory and you have storage, right? Prices going up, but people are bringing down now PC. I said PC-ish, right? Volume, which I think creates another interesting dynamic of timing here for wafer prioritization, and this is going to be true of AMD, not just Intel. Um, if perhaps client PCs don't have a great year, and one of the things they pointed out on the call was they're going to focus on the mid to the high tier of that market, which means they want to keep some of those ASPs, but they also have a very good idea, I think, as to how many units that are, so they can allocate accordingly and then shift wafers right accordingly. Um, but it is kind of unfortunate to what you said, is that I actually think the client products are extremely good, and that's going to come out on a backdrop where PCs are just going to have an unfortunate year because of memory and storage costs.
So I have been coming up recently with a new theory on AI usage. Um, and I haven't fully fleshed it out yet, but part of the genesis of this is, the kernel of this is coming from, everybody's going crazy about Claude Code. Like, I don't know about you've seen it, but I've seen it everywhere. Certainly in the financial community, Claude Code is everywhere. And not just Claude Code, but sort of Claude and CoWork and Code and so all the Anthropic stuff. And if I've been studying up about how people are actually using it and where they're getting these big, productivity gains and why they're so excited about it. And I was listening to the Odd Lots podcast, and they had a guest on. Noah Breyer was talking about this stuff, and he's been using this for a long time. And he made a really really smart point. He said the the primary feature that Anthropic added to Claude to make it suddenly very useful to people is the ability for Claude now to read and write your local storage. Right. And so you see people now doing all these complex workflows based on a fairly simple set of documentation, where they're organizing their whole life around Claude systems that are very, very automated. And all of it rests on storing stuff locally. And yeah, I mean, people are still going to use the cloud for stuff, but there is this heavy, heavy local component. And I don't see how that it's not quite ready for general use yet. I think it's still a little bit esoteric for most people, but
Oh, 100%.
but
Yes.
but you can sort of see how people are using it and how that could be productized and made useful for a broader audience down the
Yep.
road. And a lot of it rests on local storage. And certainly, I've been toying around with Cloud Code too, and one of the things I keep bumping up against is I would really, really like to have it stored locally and have run something on my computer at home and keep it all stored here. And yeah, there's some of that's privacy, but also just speed. There's a lot of reasons now, but for the first time, I actually care about Edge AI, and I probably doesn't happen soon enough to really change 26 client numbers. But
No.
I could see somebody coming up with a really good product later in the year that causes us to rethink that, and the like it gets to be bigger for more meaningful to numbers in 2027.
Yeah. I mean, I agree. And even what you brought up about its ability to read write on your system. So when I've used it, and I've used it quite a bit, it's one of those features where it's like in my sweet spot of, oh, this solves a bunch of problems for Ben, largely helping me organize my files and my ridiculously organized desktop. Um, it's also CPU spiky intensive. Like it consumes
Mm-hmm.
resources
Mm-hmm.
to do this, right? And so you could see, you start compounding tasks where it's integrating at the system level, and you need a lot more compute at the edge. So I would agree with that. To be honest with you, uh, I would take the under. This has been now playing the pessimistic role on this even impacting 2027, because I just feel like people have a terrible like most people are just terrible at commercializing these types of things. And I would say this about the largest operating system company in the world, because this is what Copilot should have been from day one. um, they move so slow, and I just don't know if that pull can even be real. I mean, I'm optimistic it's there someday. I'm just not sure that pull can even come into 2027.
I'm the optimist here. I'm the optimist on Edge AI
And Intel, apparently.
and
Like, I mean,
Intel,
I
apparently.
am optimistic on Intel. I just there's a little I appreciate the challenges of their needing to thread the needle on timing. Um, but yeah, but I would agree, and I think you're going to see more of what you just said, which is system hooks coming from all of these AI players. Like that's going to happen. Um, but again, right, and I agree with you. I not only do I want more of that to sit locally, I need more memory locally. Like I'm still constantly stunned how often my chatbot AIs, whether that's Gemini or whatever, like I have very long conversations with these things, and they just forget what happened in the beginning of our conversation. I have to
Yeah,
remind it, like,
yeah,
remember,
right.
X, Y, and Z, and like they
Right.
just need more memory. Like it all
Right.
needs more memory. And that's actually a value proposition. Like more memory links itself to the end use case that the said user will find valuable. And so it's chicken and egg, right?
Yeah, because the memory the I would be willing to bet that we actually get an exciting, compelling consumer application for all this stuff before the memory crunch eases, which is just going to
Actually, I
prolong
would
the
agree
memory
with that.
crunch.
I would agree with that, because
You
this
know,
is going to be bad for a really long time. Um, So yeah. So anyway, summarizing all of it, it's very interesting timing as a whole. To be honest with you, the sheer constraints were out across the board. The dollars that are up for grabs for people who can fix these constraints and scale accordingly. The unfortunateness of client, PCs probably going to have a very bad year, with the exception, I would say, of some things I think Apple has up its sleeves that might wreak havoc on the Windows PC world, to watch out for. But yeah, uh, I think 2026 is actually more interesting because of its problems than like where we were last year, where we were like, this is just all up and to the right. Now it's like,
Yeah. Yeah.
there's
No.
there's like, that was great that it was up and to the right, and that has created a whole slew of underlying problems that
Yeah.
that are now unwinding.
Yeah. It's going to be a year of constraints, and everyone's going to bump up against them. Even companies that are seemingly untouchable are going to bump up against them, just because there's so many things beyond everyone else's control.
Yeah. And just last point on this, because we were talking about this the other day relative to NVIDIA. If everybody understands that these are all constraints, that everybody's constrained, memory, storage, microcontrollers, PCBs, substrates, you name it, right? So, won't most of that get priced in? Like, how does that really change? Like, I don't know. Like, maybe that's just not a great. Sure, people will grow and do fine revenue wise, but if all that gets priced in, then I'm kind of like, what happens to the stock market if so much of this, if they just price in all these constraints?
So I would say, and I'm not talking about any company in particular here, but I certainly agree that, I mean, look, at some point, some company is gonna announce a quarter. Another company is gonna announce a quarter where they're like, oh yeah, we can't ship our widgets because we couldn't get the boondoggle in quantities we needed, and right, and whatever, it's memory or electricity, and they're gonna get punished, right?
Mm.
Even though you go talk to any individual investor, they'll say, oh yeah, this is the 1 quarter problem, it's a 2 quarter problem. They'll get those. Everything is now priced at the point where
Yeah, that's true.
people are just, or I should say, it's not priced at that way, but I mean, like the just there's a lot, the mentality of the market seems very much, it seems very tense, right? Because it's the build has gone on so long, the trade has gotten so extended, and so even good companies will get punished in ways that they don't deserve, and you know, um, and that's just the nature of the market right now. That's my best guess, and that doesn't mean like go buy on the dip, or doesn't mean sell all
No,
your
for
great
sure.
companies. Like, I'm just
Yeah.
saying, like, this is like, there are going
Uh,
to be these constraints, and some will get looked through, and others won't.
yeah, agreed. And I think, again, right, that's just going to be the narrative on all these calls, is just going to be, look, we could have done better, but we're up against constraints. Like, we sense the demand, and demand outstrips our supply. Like, that's pretty much going to be commentary. And now I think it really just comes down to, how long we talking? Like, that's the real question. Like, how long are we going to be supply constrained? And I don't think anybody knows the answer to that.
No, nope.
Oh,
But
okay.
when we
Well,
find out the answer, you can hear it here on the circuit. There you
you'll hear
go.
it first. You'll hear it
There's,
first here.
there's the outro.
Oh, joy. All right. Well, thanks for listening, everybody. And we will talk to you in another episode next week.
Thank you, everybody. Click like and favorite, tell your friends, and subscribe to the Diligent Stack, Ben's new newsletter.
Thank you. Goodbye, everybody.